So you gold broke 2000. I was about to tell you that as well. Gold just broke 2K. Um,
Yeah, I saw it this morning.
wait, you what were you saying about the Dixie?
Oh, right. Well, it's just the DXY is just being pushed down massively, right? It's not being allowed to get above the surface because the amount of money that's being pushed into gold, and also a lot of money has actually been sheltered into big tech companies again, and Bitcoin, of course. Big tech hold a lot of cash on their balance sheet, and it's a place that investors are sort of parking their cash at the moment. I think for the dollar index to really swing back into more of an upward trajectory, well, a few things. I think if the FDIC deposit insurance increases, I think that would be very, very bullish for the dollar.
But has that
Um, you know,
not already happened with the effect? From what I understand from just reading, like that FIDIC insurance has been increased from the 250K to effectively infinite.
for institutions,
Yeah.
for the average Joe, I still don't think there's any clarity on that yet. So yeah, and I think also these regional banks as well will get a huge push from it, which will allow the dollar to increase because obviously you'd expect some money coming out of gold as well. But if you look at the like 6 months ago, there was just such a huge correlation between inverted correlation between the DXY and S&P 500. Right now that correlation has been broken, not completely, but to a large extent. It used to be S&P increasing, DXY down,
Mhm.
DXY up, S&P down. It was really as basic as that. That's been broken completely, and we saw it with Bitcoin as well. S&P up, Bitcoin up, S&P down, Bitcoin down, right? Now that's been broken as well because there's a lot less trust in the system currently, and there's a lot of more funds moving in to be sheltered into decentralized assets. And I think if you see today as well, Bitcoin's still in the green, and you see some of the alts still moving down purely because that Bitcoin is I'm never going to go to the extent, I don't think, ever in my life to say Bitcoin's a safe haven asset. I think it's a shelter against for people that have distrust in the financial system, which I completely get. I think that's probably like the
I
whole
think we've seen that now. Like a lot of this pump just does seem to be partly due to the discomfort people feel in the overall banking system. But I'm looking at the Dixie chart right now. It looks like we've had a lower high on the daily. We haven't pushed a lower low, but there's still time. But we are sitting at like a major support. So
Mhm.
like it based on like kind of that volume dying off there, we could see sort of more dollar strip coming in, which will like I'm expecting. I think we've got CPI this week.
Mhm.
There's a few sort of big heavy numbers. Let me pull something up actually. I'll get but like I think there's the CPI, there's FOMC, and there's UK CPI. So there's CPI around the world essentially
Yeah, I
next
think
week.
I think I think Bailey, the Bank of England, had been saying some quite hawkish notes as well, as to potentially sort of talking about a 50 basis points rise in the pound, which again is going to have a massive effect on dollar, right?
Yeah.
Same with the ECB. Whether the Fed as well has kind of been a little during this crisis, it's kind of I think people are pricing another 25 basis points increase. Now it's more so, there's 3 or 4 different avenues the Fed could go down in terms of its rhetoric and actually what it does to, potentially increase interest rates. But everyone's a little bit, it's just so much uncertainty in the markets because of what's happened with, SVB, Credit Suisse, and also I think something on the agenda was to talk about the injection of liquidity
Oh
in
yeah.
the Fed as well. So it's a kind of, I don't think the market's changed massively from a mid to long term perspective. I think it has from a short term perspective, because there's just a lot of uncertainty at the moment. And yeah, I mean, I'm sure you can go on to explain about what would happen if consistent funding is being pushed into banks again, from the Fed, and what impact that will have. It's only just creating an even bigger mess in the long run, in my opinion.
Yeah, definitely. I think I've just reserved a few tabs, and I think one thing I wanted to go over with you was because everything's coming through in drips and drabs. Like you're never finding a sole piece of information that's summarizing the global macro economy as a whole and where we
Mm.
stand. You're getting a bit about the housing sector, you're getting a bit about credit, you're getting a bit about the markets, and there's no consolidation of that. But we'll go into that. But what you were just saying there, like 300 billion of injection capital into effectively underpinning all of these banks. And like, I think, so let's look at Silvergate, Signature, and what was the first bank to fall? Silicon Valley. Those three have very similar reasons for their sort of deterioration. They're all holding these long-term bonds that they're locked into, and they didn't expect rates to go up as quickly as they did. So that was sort of majorly their downfall. I think if you look at Silicon Valley, there's theirs is possibly a little bit different. There's the idea of venture debt and them also acting as LPs within these VC funds. So they've got a bit of a little Ponzi scheme going on there from my perspective, where Silicon Valley is providing liquidity to these VCs who are investing into these startups who are setting up bank accounts within SVP, therefore getting more lending products. So it becomes this kind of circular Ponzi scheme that they've created, which was bound to fall underpinned by those long-term securities.
Mm.
But like Credit Suisse is a completely different issue. However, I think the two are moving along very similar paths. And like if we go back to what I was saying before when we were talking about FIDIC insurance, if I'm right and I am understanding it correctly, and essentially there's an infinite insurance for depositors' funds, this is a big step towards, I guess, the N word, nationalization.
Mm.
And like Credit Suisse has now opened a direct line of credit to the central bank. That's a step towards nationalization. You've got the same with US, like these larger banks, like let's call them like national banks within the US, they are essentially capitalistic structures owned by the state. So you're consolidating the regional banks under these bigger umbrellas. And this, I said this like a few calls ago, where I think that they actually want the banks to fail, because the banks to fail allows them to consolidate and actually eases that ability to introduce a CBDC. Like the CBDCs are issued directly from the Fed. So these banking entities, they would like, especially the regional banks, they're not under as much regulatory scrutiny as these big national ones. So
Yes.
they've got away with a lot. This brings them, I guess, there's the plus side that they get a lot more regulation, but consolidating under this bigger umbrella, which, let's be real, does have government control to an extent, is the case for issuing the CBDC. Same in Switzerland. One of the things that I think was really interesting about the buyout structures in the US was they said that they weren't allowed to offer any crypto products or services anymore.
Mm.
Now, whether this is to prevent people sort of onboarding into crypto as a result of like fear of the banking system and the collapse of it, like markets have responded. Every market right now is fearing collapse of the banking system. Oil's down, I think 2% right now.
Mm.
So everyone's looking at it, and I think reality is now kind of struck across the board.
Mm. Mm. Yeah, I'm just touching on what you're saying there in terms of you know, along the lines of what's been issued to stop you know, banks sort of, you know, lending to crypto institutions or what have you. Look at these, you know, not traditional, in the more of the traditional sense, the tech groups out there, right? That are probably just as risky, you know, to lend to these guys as it is, you know, to lend to, you know, like a crypto bank or potentially, you know, a small, you know, crypto project. There's, you know, speculative institutions all across the US. And I think it touches upon your point as to it's all potentially a ploy to phase in CBDCs, right? And say, look, cryptocurrency is not safe. We love the technology of it, but I tell you what, we'll put it through the back door and you use our government-backed cryptocurrency. It's much better. It's much safer. And that is a massive worry that I have
Yeah.
in terms of our own sort of right to freedom, because I think with social media, this is going potentially off topic, but with social media and the information we see around us, it's partially controlled, well, entirely controlled by big tech, but that big tech and the US government are almost the same institution. They're the same body.
Yeah.
And they can turn on a switch to try and control people's minds essentially by what they pushed out in the media, which again is and a thing we can talk about on another day. However, they haven't quite been able to control your spending yet.
Yeah.
I know China have trialed it over the last few years with the E1, but this is a really worrying time, and I actually have zero doubt in my mind that this will happen. This will happen. A CBDC will come in. It's the natural way forward.
Do you think that it's something that we will like? I think yes, it's going to come. And one of the things that I think it might be limited to initially would be kind of like your lower economic class, where they would be the ones to receive, I guess, a universal basic income, and the government will essentially. I think, look, let's go back to money in general. Like from the way I look at it, money has gone through this evolving process where the transactional speed is like the velocity of capital is increasing, and that's what they're doing right now. Is by going digital, they're increasing that velocity of capital. So I understand some of the benefits of it, and obviously I'm very scared of like the negatives, but from a government perspective, having a CBDC where you can increase the level of velocity capital, but that it makes a lot of sense. It allows you to spend better, allows you to have more data points to process it, to make better decision making if it's used in that way. But the powers that be will most likely not use it in that way and use it to hold more power over us. But these timed payments that's the concerning thing. But it comes from the two economic systems, one where I look at, I guess, the government as the centralized taxation collections, and I've said this to you before, and the function of the economy and how well the economy functions is purely down to how well they allocate capital into the right stimulating areas. And if they're not allocating it correctly, the economy ceases to operate, which is kind of what we're doing now, where we're kind of stalemating and hemorrhaging cash. But then there's the real free market side of this, where if we were to just disperse currency and allow free currency, open currency spending transactions amongst the people, like a people banking system, Bitcoin Maxi, you don't need the government because capital will find its place. People will consistently trade for goods and services, but they don't need this intermediary. Like, I think Dubai is a really prime example of this, where you have the ability to build infrastructure yourself. Even in a lot of the emerging markets, you can go in there and build infrastructure yourself under a sort of a PPP model. So, and you're then splitting those revenue streams. And Dubai's got several of these, and they're even doing it with not just on like an infrastructure level on those sort of higher capex infrastructure projects, but even on the SMEs. Like they're doing private public data sharing to develop new SME businesses that are co-owned between both a private and the government. So I think the West seems to be going down this train of thought that they need to retain power. The CBDC is the tool to retain that power and grow that power.
This is what I mean. Like I think the use cases, like you said, in terms of the deployment of capital, is a huge and could make the market far more efficient and also reliable, because pretty much every single transaction can be traced, right? And you can find where dollars have gone, right, on the ledger. It obviously, of course, probably won't be made public to every, as we say in Britain, Tom, Dick, and Harry. But at least an institution or government can actually view where money has gone, what it has been spent on, how it's been lost. It could have a better stress testing mechanism, because they can actually, from a very minute and nuanced detail, see where funds have gone, trace them, track them, decide whether they lend to this institution based on the track record. Yes, I get that, but I think me and you probably both know what it's actually going to be used for in the long run, based on how information has been completely, I feel, weaponized by governments in the West to make mass population think a certain way. And I feel like it's going to be the same with CBDCs. It's going to be weaponized to make society spend on certain things. And then also, I don't want to get too deep into this conversation. A potential social credit score could move in as well, and give you points depending on how good of a citizen you are, and allow you to spend on things that not so good citizens, let's say, aren't allowed to spend on, which I worry about. I don't know what your thoughts are on that.
It's just it's really weird, because one of the things you just said there, it's kind of made me think of, well, look at the bigger picture. And I think a lot of these governments in the West have gone really out of their way to like dissolve religion, dissolve the family unit. And this was something that was used as a tool during in all communist countries, where you actually take down those smaller sort of religious groups that are looking to a higher power, because you as the government are going to become that higher power. And that's the way I'm looking at this now. And I'm it is probably the most communist or socialist model that you could go for. Like, in a sense, the whole crypto space is very socialist in the way that I don't want to even say the word, you democratize everything. But I guess the level of people that are so impact driven in the space, like everything they're doing is trying to drive as much impact. So it's a challenging one. Like I am very, very concerned. I'm also not so concerned being in Dubai, but like, I guess, but we live in a smart city. So like we've already taken the steps that a lot of those countries are still debating, like where we've all got an ID, we've all got all sold off our DNA and our souls and everything, our faces to the government through their ID system. And that's part of living here. But I don't see it being used in a way that's to manipulate me or control me. I see it as actually the way that allows me to leave my door open at night.
Yes. Yeah.
To like, my car's always unlocked. The fact that I can leave my phone or my wallet on the table at a coffee shop, go away for an hour, and it's most likely still going to be there. Like, that's how I see the data being utilized.
Yes.
And
I think it's a security driven frontier that is very, very new for any sort of new developing government to use, and I certainly agree with that.
Yeah, look, and this like, even pre-digitization, there was a lot of respect for government and for police because of the way that they portray themselves. They don't portray themselves as an enemy of the people; it's as a friend and a support of the people, which I guess is just I guess the police in these other countries in the West have started to align more with government, whereas that's not how democracy is supposed to be. So you could look at our little autocratic state over here and say that we're probably a little bit more democratic and liberal than they are. But they used information more. Like, people wouldn't do drugs here, and it wasn't because they had all this digitization. It was because they knew what the punishment was, and the punishment was equal to the crime in their eyes, and people looked at the crime as not worth doing it because the punishment was there. And that, I think, has been sort of died out in the West. I think I'm going to get onto the death penalty. I don't know how we got here. How we got onto the death penalty.
Yeah, I thought there's a markets and price action focused conversation. I'm willing to go down that rabbit hole, but we could be here for a few hours or so.
But like, one thing I wanted to talk about as well is just to kind of like summarize everything that's going on. Firstly, I wanted to talk about, did you see Balaji's tweet?
No, I didn't.
So he's essentially made a bet like $1 million bet. Let me share my screen actually. It's an option. This one.
Okay.
You see it?
Mm-hmm.
And he's gone on a huge rant. So he's essentially saying that within 90 days or just under now, in 3 months, the US dollar will hit hyperinflation. And he goes into a lot of detail on this thread. I'll probably put that in the link box below, but I'll share it as well with you. But he goes into a lot of detail that kind of convinces me, but there's a lot of like speculators that are hating on it. I do respect him as a free thinker, but it does, there's a lot of anger, I would say, in his post.
Mm.
But he's
Just summarize what he's offering to his followers.
essentially what he's saying is they're going to use a custodian or an escrow for this bet. He's going to put $1 million in this escrow and 1 BTC, and against, I think it's this James Medlock. And essentially, if the US dollar isn't hyperinflated within 3 months, he will pay the $1 million and the 1 BTC. But if it is hyperinflated, he will receive 1 BTC and a worthless $1 million.
I mean, it doesn't seem like that's much of a great risk reward from his perspective. I think it's more of a marketing angle than anything by the looks of things. But I think there was always in institutions, in people's thinking, they priced in that, yeah, if we went into hyperinflation, that Bitcoin would really push new highs. And I'm a firm believer in that. I just think that it's a very small percentage of the probability model that will happen. I'm all for it happening. I want that to happen. I'm unsure if it is. It really depends on such a multitude of different scenarios surrounding how inflation is controlled, right? And of course, this isn't a good sign, right? That already, the first sign of kind of haywire in banks, the Fed jumps in straight away, goes, right, 300 billion, let's inject it, let's kind of try and prop up the banking sector, right? We've only actually been raising rates for a year and a bit, and we're trying to get the Fed's done almost no tightening as well, no QT. It's really just raised rates, and we're in the most debt we've ever been, the US especially. Where does it actually end? Unless they actually get a grip on this, yeah, it could be a likely scenario that we do see hyperinflation. We do see a lot of assets like gold and Bitcoin as well benefiting from that. It's just a question of how it's managed, more so in the traditional world by central banks.
Yeah, there's obviously we've got this stimulus of 300 billion back in, and you're right, there's been very minimal QT, and I think this is just there's been the Fed's kind of trying to manage media and communications with actual operations. They don't want the market to spiral out of control and crash, but once again, they need to do their job and reach that 2% target. So, like you can remember back in November, was it November 21 when they were saying that inflation was transitory and they didn't do anything to raise rates? They waited, I believe, 6 months? I think it was the June or July to start that process. Well, I think it was May, actually. You can see here, May when they started to reduce those rates of 22. So if they'd actually begun to start earlier, obviously the QE started under the Trump administration. It took a much larger leap under the Biden administration with the infrastructure bills. But if they'd actually begun earlier and stopped trying to play the media game and control the markets through comms, they could have technically probably aimed for that softer landing. But now they've probably taken this a lot. They've overshot essentially now.
They're still using those softer comms. We saw last month Powell mentioned, I don't know how many times he's mentioned disinflation in the last 2 months. I don't know if anyone's been listening, but the times the term disinflation has been used. Do you remember what he was saying? Like you said, November, December 2021 is transitory. it was a load of rubbish, let's be honest. And now again, I see him mentioning disinflation. Have we noticed everything around us? Look at gold now. Look at Bitcoin.
Yeah.
DXY is taking hit. Potential banking collapse. It doesn't look like disinflation to me. It looks like almost the polar opposite of that. And it's like Powell's got to keep his friends sweet, right? He doesn't want to scare the markets too much. But yeah, I really struggle to. The question for traders is, there's so many different variables you have to think about as to what comes out of Powell's mouth and how that is actually going to affect the markets. Because it's really not black and white, and there's so many different sort of avenues you have to go down to actually kind of get an understanding of what position to take. And at the moment, it's very, very difficult because there's just such a huge amount of uncertainty. If you asked me 2-3 weeks ago, I would have told you, Bitcoin's heading down. It's certainly heading lower. In comes a banking collapse, and boom, all your technicals, all your fundamentals, your order flow analysis, it's out of the window. And then you have to sort of take a new stance, and you have to adapt. You can't stick to that old stance. You have to consistently adapt, and especially in a market that is ever changing, and is prone to a next crisis around the corner.
So what's your thoughts on the next rate hike?
What it will be, I think like I said, there's a few different rhetorics that could be used. For example, I think a 25 basis point hike could actually be very bullish depending on what terms Powell use. It could also be very bearish depending on what terms Powell uses, right? And what words he decides to use, because the words that actually come out of his mouth, depend on whether there's a huge, billions of US dollars being pumped into stocks or sold off in stocks. It's incredible power. And I think if there's no hike, it's going to be massively bullish for the market. And I think probably the most improbable scenario is a 50 basis point hike. I think that would just send the markets just crashing, absolutely crashing. It's not going to happen. I would probably think that's a 2.5% chance that could happen. I think
you're going against the Fed watch tool.
50. I don't see 50 basis points happening. I think there's too much stress on the markets at the moment already, and to just honestly, it's like rubbing salt on the wounds. It would be really silly.
Yeah, they're saying 62% probability.
I will take a bet with you now on this call that it won't be 50 basis points. I'll give you those odds if you want.
Well, this is the thing, like based on this, if they don't increase according to what's priced in here on the probabilities, then more than likely the market will fly. So that's the kind of way I'm looking at this right now. But like I agree with you. I think that if they do go with 50 basis points, the market will take a huge hit.
And maybe already, what's happening with the dollar index? What's happening with gold? I mean, I know there's a huge amount of uncertainty, but if we're pricing in 50 basis points, I think the macro market should look a little bit nicer for the US, but it doesn't. I just think honestly, I think it's so unlikely that that's going to happen. But I could be wrong, of course.
But, I think wrong.
Yes. 25 basis point hike is probably the most probable of scenarios. But again, it depends on the terms that are used. If it's quite a future hawkish tone as well, it could be quite bearish. But it could be a tone taken out by Powell that is, oh, we're raising now, and we probably this may be the last, this may be the ceiling of the rate increases. If that's the case, I think they could be largely bullish for the markets.
Well, I'm just looking at here, and it doesn't look like they're looking at any 25 basis point hikes for the rest of the year. Well, probability.
I think banking collapse has changed that, though, right? I mean, I think if this bank collapse didn't happen, we could. People have been saying, and economists have been saying 50 basis points for the last few months. But it hasn't happened. It's a large increase. And like I said, it's not even the the size of the interest rates at the moment. It's the fact that, you know, the institutions are suffering because the interest rates are staying high. It's not because they are high, if
Yeah.
that makes sense. There's a clear difference there. It's consistent pressure and stress on the economy, and institutions, and they want it gone. Hence why there's just so much volatility as soon as, you know, there's a lower rate rise than expected, right? Or some, you know, term used by Powell that could be, you know, mildly bullish. There's just a huge amount of money that just pumps to the upside because there's just a huge amount of stress in the markets at the moment and worry.
Yeah, and I think I can't remember where I saw the post. I think it was the European Central Bank, but it was some official there who said that they would lie if shit hit the fan. And
Mm.
even like the terminology here, like obviously they've increased their balance sheet substantially, not just within the US, but in Europe now or in Switzerland. Um, so they're not using the word sort of like they're easing or anything like that.
Mm.
They're kind of in this, I guess it's very representative of the situation, which is stagflation. You're going to kind of, you're on this seesaw. You're having to pump liquidity to kind of keep your system alive, and two, you've got to sort of reduce inflation, so increase rates. So balancing between the two, but once again, it's a balancing act.
Yeah, it's damned if they do, damned if they don't, really, the situation they're in at the moment. You
Yeah,
know, it's like trying to, you know, performing CPR almost. You know, keeping something alive only for it to, you know, die off again, and then having to keep it, you know, bring it back to life. It's like, what do you go with? Do you just consistently go down raising rates in that route? But I mean, like you said, does the US want banks to fail? It almost would be easier because, you know, it's, you know, it's like kind of almost like a relationship, right?
yep,
You know, you don't want you're going through a breakup. You want to know whether you're breaking up with a girl or not straight away. You know, it's a lot easier to deal with the pain, right? But if you know, kind of go wishy-washy and then see her sometimes and then don't see her, then you kind of have another break. It's essentially, you don't know what you're doing, right? There's no route you're going, you know, definite route you're going down, and that's why there's so much uncertainty in the markets at the moment. Because actually, can anyone tell you what route the Fed is going down? No. You
no.
know, and
Can the Fed tell you? No.
yeah, and this is, you know, why this is what I don't love seeing this, but I love markets being volatile. You know, it draws a lot of interest for me personally, and I think you as well, Aaron.
Yeah.
But yeah, of course, I'm sure there's a lot of investors and so-called, in slang terms, bag holders that are desperate for these uncertain markets to come to an end.
Yeah, exactly. And I think like we're heading for a crash, and it's not sustainable. Um, it was as I said, I was just evaluating some of the other data that's out there. One is like the credit card data. I'll pull that up actually. This was really, really interesting. So credit card debt is at, this article claims to be just under $1 trillion, but I've seen other sources that have said it has hit $1 trillion now, which is just unreal. And this doesn't even take into account the buy now, pay later programs, which is just another form of debt model. There, as I said, just under $1 trillion, and even the interest rates on those credit cards have increased by 15%, which is just extremely excessive. I know a lot of this is centered around the US, but it wouldn't put me past me that if a lot of the UK was in a similar position right now.
Mm.
Like, what's your perspective being in the UK? Like, is there anything that you're kind of noticing?
In terms of like, well, I think like we've spoken about this before, and the rise of, you know, buy now, pay later schemes, and I think it says a lot about the economy when you a bit more of a nuanced example. You go on Deliveroo to order your I don't know, a bi-weekly takeaway, and you can finance that. And I think that says to you kind of where the market is at the moment. Literally financing a takeaway on
Yeah.
Deliveroo. You know, I think you look back 10 years ago, it was, it was common to finance a car, right? And then 5 years later, it was more common to finance a watch, right? And then over the last 2 years, kind of retail financing has been quite common. Buy now, pay later for a t-shirt that you want to purchase, or a jacket that you want to purchase. And now we're going all the way to, financing schemes for takeaways.
Yeah,
I
like
mean, come on.
$10. Like you need to
Yeah,
finance $10.
yeah. You're going to tell me that, the bus ticket that you get in the morning is going to be financed soon. I mean, come on. What is going on at the moment in the economy? Does anyone just step back and take a look and think how ridiculous this is? That takeaways can be financed now? What surely there should be some sort of framework as to what can be financed to what can, because it's almost a mindset and a psychology thing as well. I think in the UK, it's very typical to just think, oh, it's all right, I'll put that on Klarna, I'll put that on ClearPay.
Yeah.
It's interesting the numerics that you showed with the US as well. I wonder if that's also, you price in the interest rate rises, the default rate percentages as well on credit card debt too. I mean, within 6 months' time, that figure could increase by 10%, 15%, right? It's consistently accumulating, especially compounded interest too.
Well,
Um,
this is another page, and this reference is from December 22. And at that point, credit card debt was at 564 billion, and now it's at a trillion. So it's close to doubled.
mm, I think it was an interesting article, but from the geographies and states in the US that are taking out the most debt, Connecticut being at the top.
What goes on
I'd
in
like
Connecticut? That's what I wanted to know.
actually been to Connecticut before. And well, I did sort of a journey, Boston to New York, and drove through Connecticut really. But you can imagine, like the South, for example, South US, is the doesn't really have a huge amount of debt compared to Connecticut, the average individual, right? Maybe, I don't know, you could argue that they live a little bit more of a balanced life that's less materialistic. You can imagine sort of New York, Massachusetts, Connecticut as well being home to a very, very wealthy crowd,
Yeah.
top line, but also people that are trying to keep up with the Joneses too, which I don't think it's really like that, the culture in the in the South. But hey, I'm not an expert on US culture, but I could imagine that from a top line perspective, that is kind of the understanding of it.
Well, this graph was interesting to me because just from the looks of it, it actually says to me that the credit card debt has a lot further to go.
Mm.
Now, if we look at '07, like you can see it right there, '07, we were peaking of the amount of outstanding credit card balance. So these are delinquent Americans. Sorry, I didn't say that. The article said there's no delinquent Americans. But
They're
you
all
can see when it's peaking at just, I guess, 6.75%. And here we are, like back end of Q4 22. I haven't got an updated one here, but that's under 2.5%. Now, if we were looking at, and look, a lot of the charts do mirror all previous crashes, financial crisis. I think I listed a few of the years out to you as well. But from that perspective there, what was the years I listed out? I'll go back. 1946, 1969, and the 1974. All of those crash market structures mirror what we're at now. But I'm looking at the credit card chart here and I'm like, oh, that doesn't look like it's going to pop yet.
Mm. Mm.
But
Look,
then,
we've only had high rates for, like I was saying, year and a half maximum, and they've been gradually increased, you know. I still don't feel pain is being felt yet. It's a tiny bit, there's a surface level wound at the moment on the economy. I do genuinely believe, and this is a great chart to show, I think,
yeah,
as the extent of the consumer and the pain they're feeling, and they're not feeling the pain yet. They will feel the pain. I don't want them to, but I think this will show 12 months, 18 months, one of, I don't want to be all doom and gloom, but probably one of the worst, if not the worst economic crisis.
I'm looking at it as a bit of a lagging indicator, because especially when you look at like the unemployment numbers, like these are the lowest level in 54 years. And like on the top, it sounds like a really great metric to say like, oh, unemployment is at its lowest, people are working. And yes, it's a goal for you to have low unemployment, but it's also a goal that there's excess capital, which would also explain like the lack of credit card delinquency, because there is this surplus of capital still in the market. Inflation is still very, very rampant.
There's 500,000 jobs added, right? However, is that one job per person, or is that 3 jobs for one
exactly
person?
that, and that's another thing you don't know. Are people doing more than one job just to make ends meet?
Yeah, they are. Yeah, I would definitely assume that in the US, definitely. It's such a like a one-dimensional way of mentioning it. It's great for the media. 500,000 jobs added, 3% unemployment, lowest in X amount of time.
Yeah.
Okay, let's really granularize that.
And what does it mean? That's the thing. Like people don't really understand what they mean. They think it does sound really good, but if it's persistent for too long, it means the inflation is rampant. And look, I'm evaluating all angles, because I think just we can never time the market, but in terms of anticipating a crash, mortgage applications, these are at their lowest level since 1996. So people looking to buy new properties has reduced. There's also a lack of property within the market. 6.5 million homes short. So one, there's not enough supply, but also there's not enough demand. So these are things that I'm really paying attention to now, is that like, if no one's got the money to buy these houses, and we're now taking, well, all of these banks are effectively consolidating all of these assets now, the regional banks under national banks. It leads me on to one more thing that I think Lloyd's came out with this. I'm sure it'll come up here. So if the retailer can't buy a home, the bank will, where you've got Lloyd saying they're going to be the biggest UK landlord. So this really plays into that whole narrative under like the sort of World Economic Forum, where like life as a service.
Yeah.
You're renting from these big state capitalistic entities, everything. And this is why I'm saying like banks need to fail, because they need to be consolidated. It needs to meet the agenda. And this is the only way it works. It only works if you can consolidate, excuse me, consolidate it under these bigger umbrellas that are controlled by governments. And there you fix your flow of capital from the government's perspective.
Yes.
Yeah, that's a scary one. That's a very scary one.
I think that's for the next conversation we have about world control and domination.
Who are the elites and why are they after us? Anyways, it was good talking, bro.
Yeah, I think we covered a lot of speculative. It's a very speculative conversation, and don't mean to strike fear into everyone, but
I 100% want to show fear into everyone.
It's coming. It is coming. It's going to be the worst crisis ever, I believe.
Yeah.
I don't want to say that, but you know what? 2 years ago, height of the VIX pumping, and March 2020, and we all the way to sort of June, July, when we started talking about QE. The amount of borrowing and amount of capital injections that there were in the market, it's actually just the most basic economic principle that you borrow too much, right, at really low interest rates, and then interest rates increase rapidly. What happens, right? I mean, it's like GCSE, it's like high school stuff, right? And this is bound to happen. It will happen.
Well, that's actually a very good point there, that you just said, that borrowing, a lot of those borrowers were, I guess, on mortgages on property. So I think in one of the articles, it was around $12 trillion of borrowing, and those are on 3 or 5 year terms. So they've probably locked in a 3 or 5 year, they've probably gone for the maximum of a 5 year. So that all really unwinds in the next 2 years.
Yeah. Yeah. Wait for the adjustable rates. Sounds like the Big Short all over again, hey?
Well,
Wait for the adjustable rates to kick in.
well, when's the next election?
2024.
Yeah, so like could the US
Trump's
Fed
getting
push
arrested.
this on? He's getting arrested tomorrow, isn't he?
Yeah. So who knows what the landscape of the next election is going to look like?
Yeah, there's no way the current administration wants this on their sheet.
No way. Get out. Give it to the Republicans for a bit. Get the
Yeah,
Dems
so
back in.
they could stimulate through the rest of this regime, transition over, let the crash happen, and then come in to save it.
Yeah, rebuild again and do it
Well,
all over again.
or build back better.
Yeah.
Try that one. Anyway, let's go.
All right.